Hey, what's up guys? Welcome back to Smart Wallet and Me, where financial wisdom matters. In today's video, I want to do another update on Alibaba stock and find out the real reason why this stock is dropping down in price again. Day by day, the stock keeps dropping down, a couple dollars here, a couple dollars there, and it just seems like it's going nowhere. It's just trading sideways. And I just wanted to give you guys some idea of what's really going on behind the scenes right here. So let's get right into it. So as I mentioned this before last time, there was a bill that was put in Congress and it had passed the Senate and it was yet to pass the House. And just last week or this week it passed the House, and I broke that out to you guys early on before it was even updated here on congress.gov. And now this bill is going to go to the president, to President Trump, and he is most likely 99.99% that he's going to sign this bill into law. And if he does that, then that means that all these Chinese companies have approximately 3 years to comply to this regulations. And there's an organization by an acronym of PCAOB, and they are supposed to audit these Chinese companies to make them look like they are actually valid and their numbers are correct, and to make sure that the US investors are not being scammed. And also they want to make sure that these Chinese companies are not tied in any way to the Chinese military. So that being said, all these Chinese stocks with NIO, Li Auto, and XPeng, and all these other Chinese stocks are kind of in a zone where they're kind of going down because there's a lot of uncertainty and there's a lot of fear. And if anything, the market does not like uncertainty. They like to make sure that everything is known, everything is clear. But whenever there's uncertainty, a lot of investors get scared and they get spooked. So that being said, let's take a look at the chart for Alibaba. And you can see here today, the stock dropped $2.29. And I did a Fibonacci analysis here, and you can see that the stock price has been trading sideways since almost November 19. It took a big dive around the beginning of November, and then it hit the 50% retracement level, and then it went right back up to around a little over the 61.8% retracement level, and it has been trading sideways ever since then. And we are now right above the 50% retracement level mark. And so I would like to see this stock kind of go above this level here, above the 262, 263 level, and it has to actually pass the previous highs. If it's going to go higher, it needs to go beyond the 317 level mark for it to turn bullish again. And if it doesn't do that, if it keeps testing this 260 to 280 mark level, and the more it does that, the likelihood of it going back down gets higher. And so it would be a failed rally basically. And so it would possibly even go down to the 38.2% retracement level if it breaks down the 50% like it did back over here when the news came out around November. And so if it goes down to the 38.2% retracement level, we're looking at around $244 for this stock, which would be close to around the 200-day moving average. And the 50-day moving average is about 286. And it would have to pass that level and the $317 level for it to actually be considered a bull run on this stock. So the RSI strength for this is right now 43, and the momentum is around 8, which is pretty strong and pretty solid. And the money flow is around 58. And again, just to give you an idea, 80 is overbought and 20 is oversold. So we are still on the high end range when it comes to the money flow and the RSI strength. It's pretty strong. But since we have been trading sideways for the last month or so, it kind of makes me wonder where we're heading, because there's a lot of uncertainty with the politics going on with our presidency, with the Chinese economy and the tariffs and things. And these things are causing the stock price to kind of trade sideways. So I just wanted to bring you guys this news here. There was an interview done by Brian Withers and Danny Vena, and they were discussing this stock. And according to the Motley Fool article, it was saying that the IPO that was failed to go public for that $37 billion deal, it looks like it's not really going to go out until possibly 6 months to a year later. And on top of it, it's going to be at half the actual value of the IPO that was originally scheduled to come out at. And so if it was around 37 or 39 billion, it's probably going to be closer to the around 17, 18 billion dollar mark, which would bring down the value of the stock and the valuation of it. So based on that article, I just wanted to show you guys here where the article says that as a result of that scuttled IPO, and it may come back, some of the reports I've read said it may come back at about half the valuation that it originally was going to command. But because of that, you're seeing a little bit of a hit to Alibaba stock over the last several weeks. Now, that being said, I still believe that this stock is still undervalued, even though it may be coming off of the US stock market. We're not sure yet what's going to happen. It all depends on the Chinese government and if they comply to these regulators to make sure that they audit their records so that investors can be feeling more safer that their money is actually going to a company that is valid and true and their numbers are accurate and all that good stuff. So if they don't do that and if they don't comply within these 3 years, then yeah, that would be a very bad scenario, and they could potentially lose about $1 trillion or $2 trillion in market cap because of the amount of stocks that are in the US markets. So Alibaba is still a giant business. It's still strong. It's still growing. It's still in the early stages, and they are very diversified in many different environments and sectors, like especially the fintech business, where the financial technology is booming and growing and is going to digital. And I believe that they're so well positioned that they can actually grow out of this whole negative news and actually just pass through all of these negative news and grow even more. I believe that the business is still growing and it's very big and very large, especially when it comes to fintech technology and financial technology, where everything is going into the digital markets, and especially in China where everything is being paid through digital dollars. And I believe that there's still a lot of room to grow in this company. So guys, that's my take on it. I think that if this stock and if this company is able to get out of this rut and there's more clarity on what's going on with the regulations in the US, and as long as there's more clarity on that, I think we can see an upside and we could potentially go out of this sideways move and go above this $317 mark. And if we do, then hold on to your horses, because this is going to be a very, very long ride up, in my opinion. So guys, let me know what you think, if you agree with this or not. I would love to hear from you guys. And like always, if you have not subscribed to my channel, please consider subscribing. I just want to see how many subscribers I could get. And also, please don't forget to like this video. Click that like button down below. It doesn't cost you anything. It's free. It will help my channel a lot, because it would allow the YouTube algorithm to make these videos go out to other people who may have interest in these types of videos. So guys, I appreciate you. I look forward to seeing you guys in the next video, and thanks for watching.